My name is Abiola for Pips Arcade, and I want to answer major questions that people have been sending to me about how to calculate take profit and stop loss for gold. So you can even zoom on it for gold. So people know how to calculate the the take profit and stop loss for basic pairs and cross pairs, but for gold they often get confused. So I just want to use this video to answer your question in our office right here in our main hall. So how to calculate take profit and stop loss for gold. Some of you might know it, I know, but the newbies always ask this question. So in case you get it as a professional, worry less. It's actually a video for beginners, those that don't know anything about forex before and they are just getting to know about how to calculate stop loss and take profit. So please don't get twisted. Now, risk reward ratio. How do you calculate risk reward ratio for gold? So we talked about your risk, your reward, the ratio, and we've taught in our own training that for beginners you can always relate to lose 40 pips in order to get 30 pips. This is because you want to give the market rooms to operate and to do its thing. So that's why the stop loss is slightly a bit higher than, but yours could be maybe ratio 1 to 2. 30 pips is what you are risking in order to have 60 pips in return, which is something like you are risking $30 to get $60 back. Or you are the type that are a bit aggressive, you want to risk only 30 pips to get 90 pips. But professionals don't do all this. They try to risk more than what they want because they want to give room to the market to do its thing, like I said earlier. So example is gold. Buy gold at this price, which is 1720, and then take your stop loss to be 40, like we said earlier, and then your take profit to be 30. Meaning, if you click buy on gold at this price and it starts going up the way you want, your TP at a particular height is get to, or appreciation it gets to, when you get to 30 pips appreciation, the market will close for you. But if you click buy and it started going down, it means the market is not in your favor. You will not lose more than 40 pips. That's the meaning of this. And then I said in the previous classes, for basic pairs, the current market price is usually less than or equals to 4 digits after the decimal point. Example is, let's say example on Euro USD. The current price of Euro USD as at this morning is 1.12688. If a beginner wants to see it that way, they will look at everything in full. But for experienced traders or professionals, they will call it like this, that is 1.1268. But a beginner will not understand this yet, but for now they already know after our basic training that the last digit, which is the fifth value, is pipette, while the fourth digit is pip, because the law says current market price is less than or equals to 4 digits after the decimal point. And we said 4. Look, 1, 2, 3, 4. This fifth one, don't round off, just neglect it, is the pipette. So the actual price on Euro USD now is 1.1268. I think that is clear. For cross pairs, e.g., any Japanese pairs, not even cross pairs now. Let me not use the word cross pair. Let me ask you clean, not to confuse. Let me say for JPY pairs. For JPY pairs, they always have 3 digits after the decimal point. An example we are looking at right now is USD JPY. For USD JPY, the current market price is 107,340. The pipette is the last, the third digit, while the pip is the second digit from the decimal point. That's the meaning of this. That current market price is usually less than or equals to 2 digits after the decimal point. And I think this is clear in previous classes. So for gold, I will do that calculation. I will clean all this now and then do the calculation for you. Thank you. Welcome back. The TP and SL for gold is what we want to calculate now. The buy scenario is TP equals to current market price plus number of pips, and we said we consider 30 pips. Then the stop loss, we are going to be using current market price minus the number of pips. We want to consider using 40 pips. That is, we are risking 40 pips in order to make 30 pips back. And then for the sell scenario, it will be TP equals to current market price minus the number of pips, which is also 30. Stop loss equals number of pips plus current market price plus number of pips, which is 40. Now to do the calculation proper, from the example we had before I clean the class, the initial calculation of on gold, we said the current market price was 1720, which is the CMP for gold at that time. Now, for a buy scenario for that gold situation, your TP will equals to 1720.00 plus 30, and this is the position you write your 30. You can see how the 30 is being written just before the decimal point. So if you do that, you will get the accurate answer, 20 plus 30. Can you see now? You have your 3271. This is how you are going to calculate. The only thing I want you to note is just the positioning of that 30. You can see, just you write the 3 before the decimal point, and this is the answer for take profit. Then look at the stop loss as well. The position of the 40. You can see the 4 before the decimal point. This is how you calculate it. Just carry papaya hit. Don't stress yourself. Don't worry yourself. Just know that this is how good is being calculated, and the answer is 1716.00. So let's do in the next page, which is I will clean this and then calculate for sell scenario. We've done buy scenario now. This is buy scenario. So I will clean and then calculate for sell scenario, the TP and the stop loss. So whichever way your direction you are facing, buying gold or selling gold, you know how to calculate your stop loss and your take profit. Thank you. Back, everybody. For the second part, which is we've calculated this. So we want to calculate the sell scenario for gold. Now we have 1720 as the CMP in the initial calculation, and that's what we want to continue with. So the TP is 1720 minus, now we are talking about the sell scenario, so it's a minus here. So minus 30, which is, this is the way you write your 30, and this is the answer you are going to get. So also the stop loss, this is the position of your 40, and this is the answer you get. So this is just to let our fellow client, business partners understand how to calculate gold, because the forex is so wild, you cannot cover everything. But the niche that we took is just the currency trading aspect. Some people do they trade commodities, they trade indices, futures, some go into cryptocurrencies, some go into binary options, but it's just a niche for everybody. So whatever niche you have taken, be serious and focus more on it. I don't go about taking this, taking that. I focus more on currency trading, and we focus better on basic understanding of what currency trading. So then we go to intermediate and advanced training of it. So thank you very much for watching, and then we update you more with our videos on YouTube. Soon we have a channel on YouTube and everything. I think we have already, but we are not really using it, and then we make it active for you guys so that you can learn as much as you want to know on your foundational studies about forex. Don't forget foundational studies about forex, especially on how to earn extra. That's my home watchword. Extra $20 to $50 is very certain in this market daily. That is what you should watch. Thank you very much. God bless you and bless our hustle.